trade management. So our next move is not a bear, it's a bull. We're sorry, we just changed the letters. It's a bull to 68,000. I believe this week we should be seeing 67, 68. We'll check it on more detail on the shorter intermediate term charts. Possible next week 72. That's what we're going to be trading. So we'll start with the daily. So the daily here is very significant in the trigger. We haven't shown the trigger. This is actually today's, very close to today's. We can see here a bounce out of 0 level on the daily. It shows, of course, something like a 1 and a 2 and a very strong swift move into a 3. We have something similar right now, and we appear to be breaking out of that bull flag formation. Remember, we're looking at the pennant, or what we believe is some kind of a bull flag. It's a bit out of proportions. Maybe we should drag the upper boundary higher to include the current market action. It would mean that we could still fall back to test 56,000 and 57,000. I doubt it very much, because on the shorter term frames, you will find that we are getting reversal, really. On the 30-minute, it shows. On the intermediate term, maybe it could also be showing now. So it looks like we finished an A and a B and a C. High degree A is finished. Whether we do a B and then we get to do an AB and a deep C, or just whether we do a B and we get to do an ABC and then move higher, is still a different matter to consider. The most probable is we're going to get to do a B, attack the market high, fail. You're seeing a dotted wedge. This is the top of the wedge, this is the bottom of the wedge. Failure takes us to do shoulder levels. You have A and C, and you get to around the shoulder level. You've hit 65,600 again, maybe 60,000 even, maybe 61,000. You will get a retraction to the downside. It would look like not a B at this point, a 1 and a 2, a 3, a 4, and a 5. At the end of the whole move, of course, we're moving inside of an ending diagonal. We should be seeing 82,000. When is, of course, a big question, open. Because this is a daily chart, it will take time to evolve into a 5, assuming this is a wave 4, and assuming that the market is really moving inside of this dotted ending diagonal. This is, of course, a bit speculative, really a bit speculative. But it would look like we're doing the cycle. The cycle here on the daily appears to be recurring, and therefore it usually forecasts the next move. So we have very strong momentum here, and the momentum is just a breakout of a level 1. And of course, takes us to a level 3. We have very strong momentum again, and assuming we had a breakout of a level 4, we should be doing higher head, which is 81. And let's take it now to internals. This was, I believe, last week's 4 hours. We could be seeing a double head if we're going to be attacking 82. If we're going to be attacking 72,000, that is the old head. We may even attack 76 before we have a retraction to the downside. The correction here shows clearly as an A, B, and a C. We were expecting that C has finished, that C in yellow has finished last week. It didn't finish actually on Friday. We had a 1 and a 2, we had a 3 and a 4. We're expecting a 5 has finished, but it turns out that that was 1 and a 2, this was 3, this was 4, and we got 5 all the way to 60,400 over the weekend. It's finished. It could be a 5, we could label it an A and a B, and we're moving out now into a C. So we're looking at that C in green, so we have an A and a B here in white. We should get a C in white. That C in white can end at 72, the end of story. Same high can end at 76. All right, it depends, of course, on the momentum picture. That's what we're going to be investigating very shortly. But we believe if we take the 200-point moving average out on the 4-hour charts, we'll check that again today, we're going to get this a head, either a higher head, a lower head, same head. We are going to get a head. To take out the 200-point moving average, you need to attack the neckline. So the most appropriate target is 67,000 and 68,000. Showing here 68,000, and the projection from leg A to leg C is between 67,400 and sorry, 67,750 and 69,574. So the most probable target is really 68, even if we fail, is 68 for the longs that we are holding. This is just an infograph that shows the kind of higher heads that we could be moving into. The market at this point has bounced, yes, 60,000. The market has bounced 61.8%. This is a bullish bounce. If we take out 78.6, comes in at 66,000. If we're going to 68, we're probably going to be attacking it, so we could take a profit here. This is the same for our chart. Again, it shows that if we are all able to take out the 200-point moving average, we're doing a higher head. And you get, of course, a progression of heads and shoulders. So it takes us to today's trade management. This is what we're looking at today when we go live on the 45 minutes. This was earlier, of course, taken earlier, but the spike in momentum clearly shows that we have a reversal and that leg B is finished. So we're looking, of course, at the 45 minutes. This is, again, inclusive of today's market action, what we get to see when we go live. It's showing an inverted head and shoulders inside of this leading diagonal or flag. This is the same flag that we're seeing, or pennant that we're seeing on the daily chart. Dotted yellow here is the same pennant that we're seeing on the daily chart. Leg A is finished. Leg A has done a 1 and a 2, turn on 1 and a 2, 3, 4, and a 5. Either this is a 3 and this is a 4, bounced out of a level 1. And we have actually 5 swings, or we can just call it an A. We've done a B, did a 1 and a 2, 3, 4, as already specified earlier, and a 5. 4 can transcend 1 a bit because it's moving inside of a wedge. We get to segregate the breakout on the next chart on this 30 minutes. The bounce here clearly comes on top of a level 1, so we have a bounce at that point. This even shows better take it to 15 immediately. So we're seeing, of course, heads and shoulders, but the bounce out of that level 1 is what we're trading, what we need to investigate. So this is what we're seeing today. There's a 1 and a 2. Internals are all showing. Internal 1 and a 2, 3, 4, and a 5. High degree 3, high degree A, high degree B. This is what has been going on. This is momentum segregated, but we're not showing the momentum plot. It shows a 1 and a 2. Internal 1 and a 2, 3. Market should no longer fall below level 1. And we're going to 64,000. At that point, we've done a 3. We get to do a 4. We're breaking out of that leading diagonal, so any negative momentum, this is a triangular for configuration. Any leading diagonal, any negative momentum on the 5 and 15 are buys. Our belief is market moves straight immediately to 67,500, 68, falls back to do the shoulders. So the first target could be the top of that cycle, 65,484. This is, of course, a cycle. That 1, 2, 3 is a cycle. It bounced top of level 1, probably bounced. You have 78.6 here, you have 100 here, you have 0 here, probably bounced around just below 50%. So if the cycle top is going to break, if the market will break the cycle top to the upside, you're looking, of course, at 127.2. You're looking at 50% between 100% and 127.2. So we take this live. We will use a target projection for the next resistance on the hourly time frame. Take profit. I believe the next resistance on the hourly time frame is around 65,000. Above that is 68. So we will use this to project targets. If you wanted to join, we need, of course, to join the market to add another half. We're going to take this to the 15 and 5 minutes. Any negative momentum on the 15 and 5 minutes are buys, as already specified, because you're still inside of this wedge. I can draft this wedge forward. You find that you're still breaking out of the upper boundary of the green wedge. Any negative momentum will mean it's just a retraction into a wave 4. Shouldn't break below level 1. Is an entry long to 65,500, the cycle top. Let's take it live. 63,057. Check momentum picture first. So very poor momentum on the 1 hour. Nothing on the 2 hours. I don't believe we get anything on the 4. Bit strong on the 45 minutes. On the 30, we can clearly see a 1 and a 2 at that point because of the negative momentum that we're having. Then internal 1 and a 2, of course, a 3. So labels are correct. Let's take a look at the targets. So on the 30 minutes, this is a weekly projection. Usually during the same week, if the market is moving higher, it should be seeing resistance too, if this is a bull trend. If it's not a bull trend, it's still a consolidation, and I believe it is, then we are only seeing resistance 1 and 50% between resistance 1 and 2. So the target really is 65,000, 64,765 is showing here. In between is 66,300. Resistance 2 is 68,000. So I believe we should take first profit at 65,000. There's going to be a fallback, buy market again, take it to 68,000. So the FIB projections that we're looking here on the right are actually for all of level A, from the top of level A to the market bottom, and the market really bounced 38.2. Right now it is attempting to support 61.8. Like I was saying earlier, a projection of the old cycle A takes you to 67,500. We're getting positive momentum on the 15 minutes, and I believe also on the 5. Sorry. Right, so let's stick with the 15. We will focus, of course, on the growth segment. That's all we would want to. So I was saying we would focus on the growth segment. That's all we would want to care about at this point. It's possible doing a 4 should take us to 62,141. We shouldn't fall really below level 1, that internal level 1. We have that green arrow. So we would want to add another half. The best is 62,000. We're looking at 61,865. It is possible to fall to 61,800, but really the best is 62,000. We can have a hedge at 60,400. The hedges worked fine today. We would want to be efficient, and therefore we should be holding longs. If we're not, we'd want to buy 62,000, showing here 61,865 and 62,140. So we want to buy in between 50% and 38.2%, 62,120. The hedge is just going to be 60,500, and we are going to take it to resistance 5 on this 15-minute time frame, 64,757. We can round that up to 65,000. We can use a hedge without a stop. We still do not have a definition of the lower boundary if this is moving in a leading diagonal. Usually it should, because it's doing shoulders or attempting to do a head. So the current pattern shows that the retraction could be quite tight. The risk is also contained. So if you raise our interest, say, to 62,400, it's resistance 2 in the first place, or maybe 62,200, and we have a hedge at 60,400, so it's just $1,800 per coin, $180 per 1/10 of a coin. Our projection, or our preference, is to take profits at resistance 5, 65,000. Wait for a retraction. You see, of course, a lot of this becomes a very big head, and the shoulder levels come in at 63,000 again. So we can fall back to 63, redo the longs. The next leg is the one that probably takes us to 67,000 and 68,000. It's better to be, let us say, efficient and just trade it from one internal pivot to the next internal resistance on the 1 hour time frame. So this means if we are going to be applying this on the 1 hour, I'm really buying this pivot at 62,500. Of course, maybe a bit lower, 62,200, 62,400, 62,000 itself. And I'm just taking it to 65,000, which is resistance 1 at 64,765.